Investing in dividend-paying stocks is a great way to not only build up your portfolio over time, but receive passive income on a monthly or quarterly basis. And what's better than making extra money without having to do any extra work? With that being said, today I wanted to go over 3 extremely solid dividend-paying companies that might be a great addition to your dividend stock portfolio. And if you guys enjoy videos like this, then you might want to subscribe to the channel for similar videos as well as my own stock portfolio updates. So getting right into it, the first one is an oil and gas company called Sunoco, or ticker symbol SUN. So this dividend-paying stock has a current yield of 5.65%, but it does tend to average around that 5 to 7% range, with an average 4-year dividend yield of 9.4%, but that is because back in 2020, the yield skyrocketed up to 28% as the share price fell during that short correction we had in the market. But since then, it's leveled off and come back to that 5.5 to 7.5% range. And with dividends included, it's had a really nice 1-year return of nearly 36%, and a 5-year total return of 221%. So it's been performing extremely well and rewarding its investors while doing so. What I really like about this specific stock is how consistent its dividend payments are. As you can see, since about 2016, there's been slight increases to the dividend per share each quarter, but it's been extremely consistent about those payments for over 10 years now without any decreases. So it's a stock that you can almost guarantee will pay a dividend every single quarter with additional exposure to capital growth as well. So a dividend stock like Sunoco not only helps to diversify your portfolio, with it being in the energy sector, but could definitely help to compound your portfolio with that nearly 6% yield and double-digit capital gains. This next one is a real estate company centered on storage units called Public Storage, or PSA. So it's one of the largest self-storage companies in the world. It's kind of the leader in that sector. And because interest rates have been pretty high over the past 18 months or so, the 1-year return for PSA is at a negative 6%. But it's had a decent 5-year return of 64%, including dividends. Now, when it comes to its dividend yield, it's currently paying over 4% in dividends, with a payout ratio of 71.5%. Its quarterly dividend payment recently increased from $2 per share up to now $3 per share. And what I thought was interesting was that it paid a $13 special dividend back in late 2022, which is actually pretty insane. This means that if you held $100,000 worth of PSA back during the time of that special dividend, your payment would have been just under $5,000, which to me is a nice little bonus. It's also been paying a dividend every single quarter for over 28 years now, so another one that you can definitely count on when it comes to consistent dividend paychecks. Okay, so this next one is considered fairly controversial since it is a government-owned company, and we know how much political involvement affects the performance of a stock, but regardless, it's one that I've owned in my portfolio for well over a year now and has rewarded me quite handsomely. It's called Petrobras, or PBR, and it's an oil and gas company located in Rio de Janeiro, Brazil, and it's mostly owned by the Brazilian government since it holds 50% of the common shares. And PBR has had pretty amazing returns recently, with its 1-year return being at 94%, including dividends. And one of the reasons why the stock has become increasingly popular over the past year or so has a lot to do with its dividend yield. Its yield right now is at 8.53%, but it's dropped down a lot since the share price is reaching its 52-week high. But if we jump back to 2022, when the oil and energy sector was exploding, the dividend yield at one point was over 73%. But as we know, oil and gas companies are cyclical, so these massive returns may or may not continue into the coming years. And PBR has gone through periods where it does not pay a dividend, which is definitely something to keep in mind. But just for fun, I'm going to pull up my position in PBR and show you guys some of the returns I've been getting. So I did buy in at a pretty good time a year ago and started to average down to a very low cost basis of $9.75, bringing my capital return to about 71%. But of course, that's not including dividends. So with all the dividends I have received over the past year from PBR adds another $1,400 to that total return. So although the stock does come with a little bit of risk, it's one that obviously has paid off well for myself, and I think will continue to be a great long-term dividend-paying company. But let me know what you guys think of these 3 dividend-paying stocks, and if you'd consider holding them in your portfolio, and I'll see you next time.